The Optimism rally after it was announced that Donald Trump would be the next US president is continuing. We're seeing the so-called NFIB Small Business Optimism Index or survey come out at, if not a record level, it's a very high level, and it's the biggest monthly increase in this index since 1980. So something, or a lot is actually happening in this regard. There's a lot of optimism, perhaps too much, but I think that will continue for the time being in the next couple of months. But we are also seeing this is spreading to other markets, where also especially the financial stocks, where they're benefiting from the Trump administration's plans to repeal the Dodd-Frank regulation of financial stocks. That will also be a help for companies that need financing going forward. We've seen the GDP figures, final GDP figures for 2016 for the Eurozone and the US come out at 1.8 and 1.9% respectively. So that's not really impressive, but it's definitely not bad either. I think figures for 2017 will be improving from here, and that's going to be a good thing. You can also see that in the commodity price index that we have increasing growth expectations. Also in the inflation expectations are increasing. For the EU, we're around 1.8% for the long-term inflation expectations, and for the US about 2.4%. And on that background, I expect the long-term interest rates to continue increasing. Typically, you have the long-term dynamic in the interest rate markets, that you have gradually declining interest rates, where you have temporary spikes up in interest rates, and we are in this development right now, and I think long-term interest rates will continue to increase over the next couple of months by about 25 to 50 basis points from here. Markets are still in a good mood. We are seeing that it pays off to be long risk or exposed to risky asset classes. Commodity prices are increasing still. Stock markets are doing well, and long interest rates are continuing to climb. And I think this will continue. Our own momentum and volatility indicator is still at a very relatively high level, so it is signaling that it should continue to pay off being exposed to risk going into February.